Good afternoon and of India under its Professional Intellect Initiative. Today we have with us CS V.S. Date as the faculty for the day. He will be dwelling upon the basic concepts under Central Excise. CS Date is a fellow member of the Institute of Company Secretaries of India and the Institute of Cost Accountants of India and also a B.Tech Honours. Mr. Date worked for 27 years in corporate field at senior levels in leading listed companies as Company Secretary and General Manager Finance. He started his career as an author on indirect taxes in 1993. He is also widely consulted in the field of indirect taxes. Presently, he is concentrating most of his time on writing books on topics relating to indirect taxes and corporate laws. He regularly conducts training programs on indirect taxes related topics, particularly on service tax. His books have been prescribed for professionals like chartered accountants, company secretaries and cost accountants, and are also widely referred by professionals and departmental officers. We now request Sir to take us through the basic concepts of Central Excise. Over to you, sir.
Thank you. Good afternoon to all of you. I am very happy to be here at this webinar today. This is my actually first experience with webinar and e-lectures. Let us hope we work well. As you know, you can ask questions and we'll try to answer as much as possible. As you know, Central Excise as such or indirect taxes is not the core subject for company secretaries. However, knowledge of this indirect taxes is surely necessary for a company secretary. This is more so because when the GST comes, many of the concepts in GST will be based on Central Excise concept for the simple reason that CBEC, that is Central Board of Excise and Customs, which is presently looking after Central Excise, Service Tax and Customs, will be looking after GST, and it is quite natural that these concepts will somehow get transferred to GST also. So, if you want to get specialization in GST, you have to start with Central Excise and Service Tax, though some of the concepts of Central Excise may not be relevant in GST. As you know, taxes are broadly classified as direct and indirect taxes. It is said that tax is the price we pay for civilized society. That is what is said by Justice Holmes of US Supreme Court. As you know, if you want a civilized society, you will have to pay taxes. If there is law of juncals, we cannot progress, and that is why taxes are necessary and we must pay taxes. As you know, taxes are broadly classified as direct and indirect. As the name suggests, direct taxes are paid directly by assessee to government, while indirect taxes are paid indirectly, in the sense that indirect taxes are collected by dealer or manufacturer and he pays it to government, but he mainly acts as a collecting agency, that is, he collects from the customer and pays it to government, while direct taxes like income tax etc. are paid directly by the assessee to government. Now, as you know, when we start construction of a building, we have to start with foundation. We cannot say that I will build second floor and then build a foundation. This is not possible. Similarly, when we want to study any law in India, we have to start with foundation. As you know, the Constitution of India is foundation of all laws in India. That is why Constitution of India is not an ordinary law. It is mother of all laws in India. It is law how to make laws. All other laws and parliamentary or government actions are subordinate to the Constitution of India, and any act contrary to provisions of Constitution is ultra vires the Constitution and is void, and that is why Constitution is the base for all laws in India. Of course, Constitution is quite big. We are not going to see all aspects of the Constitution, but there is one aspect of the Constitution which is relevant for our discussions, and that is that India, that is Bharat, shall be a union of states. Just like America, India is a union of states. We have got a federal structure. Federal structure means we have got two authorities. One is central government and other is state government. Naturally, when we have got two authorities, bifurcation of power is required between union and states. And if there is no such bifurcation, then ambiguities, disputes, etc. will be inevitable. And that is why in our Constitution itself, there is bifurcation of power between union and states to avoid ambiguities or disputes. For example, in our house also, why most of the disputes happen? Most of the disputes happen because there is no clear demarcation of authority between husband and wife. Husband feels that this is my jurisdiction and wife feels that this is her authority. And if you have got third power like father-in-law and mother-in-law, then the whole house becomes a battlefield. Why this happens? This happens because jurisdiction is not clearly demarcated. That is why the disputes happen. But one of my friend was there, he didn't have any dispute with his wife for 25 years. Now, is it possible? Is it believable? He was not dumb or deaf, but still there are no disputes. So, I was worried how this is possible that he didn't have any dispute with his wife for 25 years. I asked him secret of his success. Initially he was reluctant, but later he said, see, after marriage we decided that she will take routine decisions and I will take policy decisions. So our understanding was perfect, so there was no question of any dispute, no question of any jhagda and all that. I said, very good idea, but how do you decide what are the routine matters and what are the policy matters? He said, routine matters means which food to prepare today, where children should go to school, which movies to see, where we should go for vacation. These are all routine matters that she decides, there I don't interfere. And I said, very good. And then what policy matters you decide? He said, policy matters means what Obama should do in Iraq, what Modi should do about Pakistan. These are the policy matters. This I decide, there she does not interfere. Of course, India cannot run that way. That is why in our Constitution itself, there are three lists. List 1 is union list, list 2 is state list, and list 3 is concurrent list. That is, both union and center can take action. Now, there are various items in union list. As far as taxation is concerned, there are some of the important items. One is entry 82, that is tax on income other than agricultural income. Entry 83, duties of customs including export duties. Entry 84, duties of excise on tobacco and other goods manufactured or produced in India except alcoholic liquors for human consumption, opium, narcotic drugs, but including medical and toilet preparations containing alcoholic liquor, opium or narcotics. Why I am reading this entry 84 in detail is because this entry 84 is actually the basis for levy of Central Excise Duty. There are other items in union list. Entry 85 is corporation tax, entry 92 tax on advertisement in newspapers, entry 91 stamp duty on some specified transactions, entry 92A tax on the sale or purchase of goods other than newspapers where such sale or purchase takes place in the course of interstate trade or commerce, which we call it as central sales tax, CST. Another is entry 92C, and that treats tax on services. Now, this entry has been passed by Parliament in 2004 itself, but so far it has not yet been notified, and hence as on today this entry 92C is not yet effective. And there is residual entry, entry number 97, and that entry number 97 reads as follows: any other matter not included in list 2, list 3 and any tax not mentioned in list 2 or list 3. So, as on today, service tax is imposed not under entry 92C, but under entry 97. As far as Central Excise is concerned, it is mainly levied under entry 84, but part of Central Excise is also coming under entry number 97, because in Central Excise there is a concept of manufacture as well as deemed manufacture. As far as manufacture is concerned, the levy is covered under entry 84, and as far as deemed manufacture is concerned, that is covered under entry 97. Now, if you imagine Central Excise as a building, then of course the constitution is the foundation of Central Excise, and there are 4 pillars on which this building of Central Excise is built, and these 4 pillars are duty liability, that is when excise duty becomes payable, that is the first pillar. Second pillar of Central Excise is valuation, that is value on which Central Excise duty is payable. Third pillar is classification of goods. All goods have to be classified to determine the rate of excise duty payable. And the fourth pillar of Central Excise is VAT. So, basically duty liability, valuation, classification and VAT. These are the really 4 pillars on which the law of Central Excise is built. Other issues are there, procedures are there, appeals are there, but these are not the foundation or these are not the pillars. These 4 are the pillars. As you know, general excise duty rate is 12.5%. As on today, there is no education cess payable on Central Excise. Now, as far as Central Excise is concerned, section 3 is the charging section. Charging section is the one which actually levies the duty, and in Central Excise, section 3 of Central Excise Act is the charging section. That section states that there shall be levied and collected in such manner as may be prescribed duty of excise on all excisable goods, excluding goods produced or manufactured in special economic zone, that is SEZ, which are produced or manufactured in India. So, the section 3 tells us when and on what Central Excise duty will be payable. If we analyze this section 3, there are basically 4 requirements which are specified in section 3 for levy of excise duty. One is duty is on goods. Another is that goods must be excisable goods. That is, even if an article is goods, duty is leviable only when they are excisable goods. Third requirement is that goods must be manufactured or produced. Unless there is manufacture or production, excise duty cannot be levied. And fourth requirement is that such manufacture or production should be in India. Why excise duty is on manufacture? There is actually history. Basically, the first indirect taxes is custom duty, and in fact customs is one of the very old duty, and when any trader used to enter a kingdom, he used to pay, he used to give gifts to the king, so that king will allow him to trade in his kingdom, and slowly that custom developed into a custom law. Now, this is the first indirect tax. Then when the British came, they wanted avenues to collect the taxes. They started with land revenue, but it had limitations. Then they said that it is better to select a few commodities and levy duty on such manufactured items, because it is not possible to cover all the items, and that time the communications or etc. were not that big. So, it was not possible to tax all the items. That is why they selected few items and started levy of excise duty, and that is why excise duty started to be levied on manufacturing activity only. Sales tax is levied by mainly state government. Now, as we saw, the first requirement for levy of central excise is that the article must be goods. Unless the article is goods, excise duty cannot be levied. Now, the term goods has not actually been fully defined in law, but the case law on these goods is well settled, and according to the case law which is well settled, an article can be goods only when two requirements are satisfied. One requirement is that they must be movable, and another requirement is that they must be marketable. Unless these two requirements are satisfied, the article cannot be goods. Of course, actual marketing is not necessary. What is required is marketable. You may not actually sell that item, but it should be sellable, and it should be marketable, not marketed. Now, just if an article is mentioned in tariff, that does not mean excise duty is leviable. That is, mere mention in Central Excise Tariff is not sufficient. It has to be goods. For example, some waste and scrap is mentioned in tariff, but it is not marketable, and hence it will not be goods. Now, these are the two tests to determine whether an article is goods. That is, they must be movable and they must be marketable. Now, for example, electricity. Now, electricity, is it goods or not goods? So, we have to apply two tests. That is, electricity is surely movable, it is also marketable. See, seeable or visibility is not the criteria for goods. So, electricity is goods. Water is goods because it is movable and marketable. Now, software. Now, software, it is of two types, package and tailor-made, and both of the softwares, once they are converted into physical form, they become goods. If they are not in physical form and they are directly downloaded, then they are not goods, then it is a service. So, if the software is in physical form, it becomes goods, whether it is a package software or a tailor-made software. But if it is not in physical form, that is, it is only downloaded or you can visit it through cloud, then it is not goods, it is service. Air is movable, but it is not marketable, it is at present free. After 20 years what will happen, nobody knows, but as on today air is free, so it is not goods because it is not marketable. Another interesting is photograph. Now, photograph, is it a goods or not goods? That again is a matter of dispute. Now, for example, photograph of a film artist, now that is surely goods because it is movable and marketable, but your own photograph, it has limited marketability in the sense that except you, nobody is interested in that photograph, but still it is marketable. Even one customer is sufficient, and photograph, by the way, is actually manufactured. Similarly, waste and scrap will be goods only if it is marketable, otherwise no. As far as waste and scrap is concerned, waste and scrap is practically treated as final product for the purpose of excise, and excise duty is payable on waste and scrap. However, waste and scrap will be goods only if these are normally sellable. If they are not normally sellable, then they will not be goods. Now, for example, bagasse, etc., it is waste and it is not sellable, so it will not be goods. Another requirement is that even if it is waste and scrap, it will be dutiable only if it is manufactured. If it is not manufactured, then it may be goods, but excise duty will not become payable. For example, you have got some old machinery, you scrap that machinery and sell the scrap. In that case, you cannot say that the scrap is manufactured, because you are just dismantling machinery. You purchase some goods in packing, wooden packing or wooden case. You remove the goods, use the goods and sell the wooden scrap, wooden packing. Now, that wooden packing, it may be goods, but it is not manufactured by you, and that is why excise duty cannot be levied. So, waste and scrap is dutiable only if it is specified in tariff. If it is not specified in tariff, then duty will not be payable. For example, electronic scrap, it is scrap, it is sellable, but it is not mentioned in tariff, and then duty will not be payable. Another issue relating to goods is plant and machinery erected at site. Now, again, plant and machinery erected site is sellable, but it is not movable. Since it is not movable, it is not goods, and hence if plant and machinery is erected at site, excise duty cannot be levied. Now, this is one important case law as far as plant and machinery is concerned. In Triveni Engineering versus Commissioner of Central Excise AIR 2000 SC 2894, it was observed the marketability test requires that the goods as such should be in a position to be taken to market and sold. If they have to be separated, that is dismantled and then only removed, then that test is not satisfied, and in that case that plant and machinery will not be goods. For example, you take example of a Xerox machine. Now, that Xerox machine, you fit it on the ground so that it does not easily move, but the bolts can be removed and then Xerox machine can be easily shifted without dismantling. In that case, the Xerox machine is goods, because just for operational convenience you are bolting it. Another example you can say is lathe. Lathe is manufactured and then it is just fitted at the workshop with bolts for operational convenience, otherwise the lathe will move. You can remove the bolts and then you can take out the lathe. In that case, such lathe is goods. But for example, paper machinery, you assemble various components and then that plant gets erected at site. If you want to remove that plant, you have to dismantle the plant and then only you can remove the plant. In that case, that plant cannot be held to be goods and excise duty cannot be levied. So, the first requirement is that they must be goods. Another requirement is that they should be excisable goods. Now, the section 2D of Central Excise Act says that excisable goods means goods specified in the schedule to Central Excise Tariff Act 1985 as being subject to a duty of excise and includes salt. Now, really this includes salt is insult to Gandhiji, because for the salt he did salt satyagraha in 1930, but somehow this word salt has so far not been removed, though really there is no excise duty on salt as such. Now, goods include article capable of being sold. If it is not capable of being sold, then it will not be excisable goods. But unless an item is mentioned in tariff, it will not be excisable goods. Now, you will say most of the items are now mentioned in the tariff, and that is why they are excisable goods. But some of the items like say wheat, rice, flour, these are goods, they are movable, they are marketable, but they are not mentioned in the tariff, and that is why they are not excisable goods. Now, in tariff, Central Excise Tariff, various items are mentioned, and against each item the rate of duty is specified. In some cases, the duty specified is nil. In that case, they are called nil duty items. In some cases, the duty is specified in the Central Excise Tariff, say 12.5%, but sometimes exemption is given from duty by way of a notification. Then these are called exempted goods. So, Nil duty and exempted from duty both are slightly different, but both are excisable goods because both are mentioned in tariff as subject to excise duty. Another requirement is that goods must be manufactured or produced. Unless the activity of manufacture or production takes place, excise duty cannot be levied. Now, the term production is broader than manufacture. Comparatively, manufacture is a narrow word, production is a broad word. For example, flour is produced, iron ore is produced. So, the term production is used when new and identifiable product comes into existence without any human intervention, that is by natural process the item comes into existence, like wheat, flour, rice, these are all produced, these are not manufactured because new product comes into existence, but no human activity is carried out. The term manufacture is slightly restricted, that is the term manufacture is used when some human efforts are involved. So, if by human efforts some new product comes into existence, then it is manufacture. If by natural process some new product comes into existence, then it is production. But production includes manufacture also. For example, waste and scrap is produced, though it is not manufactured. Nobody manufactures waste and scrap. There is no intention to manufacture waste and scrap, but it gets produced. But in both production and manufacture, one thing is common, that is new and identifiable product should emerge. Unless a new and identifiable product emerges after the process, the activity is not of manufacture. As we saw, usually the term production is used for a new product by natural process like asbestos, flour, wheat, etc. The term manufacture is derived from manu, that is by hands. So, if with human intervention new product comes into existence, then you can say it is manufactured. For example, table or chair is manufactured, furniture is manufactured, machinery is manufactured because it comes into existence due to human efforts. Machine effort is also part of the human efforts. So, items like ore, asbestos, coffee, tea, tobacco, dairy products, these are all produced. Even live products like horse, fish, flour, these are produced. Byproducts, scrap, etc., these are not manufactured, but they do get produced. So, on all these items excise duty can be levied, though some of the agricultural products are not subject to excise duty. The term production also covers manufactured goods, as term produced includes manufacture also. Now, the term manufacture again is not fully defined in Central Excise law, but what is manufacture, that is more or less settled by various Supreme Court decisions. And as per court decisions, an activity is manufactured when new and identifiable product having a distinctive name, character or use emerges. So, this is the acid test to decide whether an activity is manufactured. A new product must come into existence which is distinctive name, character or use. This is the definition of manufacture as evolved by various Supreme Court decisions. In addition, there is one concept of deemed manufacture, and this concept of deemed manufacture has been incorporated in Central Excise law. Now, this deemed manufacture under Central Excise law is of two types. One is process, that is defined as amounting to manufacture in Central Excise Tariff, and another is there are some 146 products which are covered under MRP valuation provisions. In such case, in products which are covered under MRP valuation provisions, even labeling and relabelling will amount to manufacture, though normally simple packing, simple labeling is not manufacture, because new and identifiable product does not come into existence. Now, as far as manufacture is concerned, the most leading case is Union of India versus Delhi Cloth Mills, AIR 1963, SC 791, and it is a 5-member constitution based decision, and it is still held as completely valid and is followed. And as per that decision, manufacture means bringing into existence a new substance. Manufacture is end result of one or more processes through which original commodity passes. Manufacture implies a change, but every change is not manufacture. A new and different article must emerge having a distinctive name, character or use. Only when this process results into a distinctive product with a distinctive name, character or use, then only you can say a manufacture has taken place. Now, for example, repairs. Now, you take a fan and you repair it, you replace some coils, etc. Now, is it manufacture? No, because new and identifiable product has not come into existence. Similarly, you take some product and do some testing. Now, is it manufacture? No, because new and identifiable product has not come into existence, and then excise duty cannot be levied. Again, packing. Suppose you get liquid oil in 200 liters drums, and then you pack into 5 liter packs. Now, is it manufacture? No, because in 200 liter drum also it was oil, in 5 liter pack also it was oil. In that case, packing will really not be manufacture. However, in Central Excise Tariff, they are defined about 35 processes which are deemed manufacture, that is, they are deemed to be manufactured, and in that case, even if new product does not emerge, it will be treated as manufacture, and for all legal purposes, and excise duty will be payable. Now, another example is of assembly of computer components. Now, let us say you go to market, purchase monitor, purchase motherboard, purchase keyboard, purchase mouse, take some cables, you bring them, take a screwdriver and put them all together. Now, is it manufacture? Indeed, it is manufacture, because new and identifiable product which is known as computer has emerged. So, whether you take 5 minutes or 5 years, that is not important. Whether you require machinery or not, that is not important. What is important is that new and identifiable product must emerge, and once the new and identifiable product emerges, then surely it is manufacture and excise duty will become payable. Another example is assembly of CKD packs. Now, as you know, big machinery, it cannot be dispatched or in totally fully assembled condition. There is a machinery is manufactured, but it is dispatched in different small parts, and then these small parts are assembled at the site, and then the machinery is actually manufactured. Now, in that case, can we say that the machinery is manufactured at site? No, actually the machinery is manufactured in the factory itself. Only for transport convenience it is sent in different parts. For example, if you purchase a computer say from Wipro, now the Wipro never sends you computer in fully assembled condition. It packs motherboard separately, keyboard separately, monitor separately, and the engineer just comes and assembles. In that case, you can say that the computer is manufactured at Wipro Bangalore and not at your office place. Another example, interesting example, is of cycle. Now, you know, cycles are manufactured in Punjab, but they are never sent from Punjab in fully assembled conditions. They send frame separately, seats separately, pedals separately, tires separately. All these are sent to the cycle shop, local cycle shop, where the cycle shop just assembles and the cycle comes into existence. But really, legally, cycle is manufactured not at the local cycle shop, but it is manufactured in the factory at Punjab. Only for transport convenience, it is sent in parts. So, this is the concept of manufacture. In addition, in central excise there is a concept of deemed manufacture, that is, it is not manufacture as defined by court, but still it is treated as defined as manufacture. Now, there are some processes which have been specified as amounting to manufacture in central excise tariff. Now, for example, galvanizing has been defined as amounting to manufacture. Now, after galvanizing, new product does not come into existence, but since it is defined as deemed manufacture, it will be treated as manufacture and excise duty will be payable. About 35 processes have been defined in central excise tariff as deemed manufacture. There are another type of deemed manufacture is regarding articles which are covered under MRP valuation provisions. There are about 146 articles which are covered under MRP valuation provisions. That is, in case of those articles, excise duty is payable on the basis of MRP which is printed on that package. In case of such 146 items which are covered under MRP valuation provisions, repacking, relabelling, putting or altering MRP is deemed manufacture, and in such cases excise duty will become payable. Though normally just by repacking, relabelling, new and identifiable product does not come into existence, but it has been defined as a deemed manufacture, and then excise duty will become payable on such products also. There are about 144 articles which are covered under such MRP valuation provisions. So, the next, as we saw, that manufacture, that is either actual manufacture or deemed manufacture, is the taxable event. Now, taxable event means the event once it occurs, the liability starts. For example, in central excise, what is the taxable event? Manufacture or production of excisable goods in India is the taxable event. As soon as a article is produced or manufactured, excise duty liability starts. Now, this is distinction between sales tax and central excise. Now, for example, if an item is manufactured but used within the factory, in that case it is not sold, and then sales tax will not be payable. But since the article is manufactured, the taxable event has occurred, and then excise duty will become payable even if you do not actually sell that item. So, that is the basic distinction between sales tax and central excise. Now, for example, in central excise there is a concept of captive consumption. Captive consumption means you manufacture an article within the factory and use it within the factory, you do not sell it. So, now if you do not sell it, naturally sales tax is not payable, but since it is manufactured and you use it yourself, then it is called captive consumption, and legally excise duty will become payable. Another example is of free samples. You give free samples and then on that sales tax is not payable because you are not selling them, but excise duty will become payable because though you are not selling them, you have manufactured those sample, and then excise duty will become payable. And that is the concept of intermediate product. Now, for example, you are a manufacturer of automobile. To manufacture automobile, you require various components. Some of the components you may buy from outside, while some of the components you may manufacture within the factory, and those components you will be using for manufacture of your automobile. So, all these components which you manufacture within the factory and use within the factory are called intermediate products. Now, theoretically you have manufactured those components, and then excise duty liability is there. However, there is an exemption that if you are paying excise duty on the final product, then you need not pay excise duty on the intermediate product. Now, for the example which we saw, if you are paying excise duty on automobile, then you need not pay excise duty on the automobile components which are manufactured in the plant and used within the plant for manufacture of automobile. However, suppose an automobile is exempt from excise duty. Now, for example, tractor below 15 horsepower, they are exempt from excise duty. No excise duty is payable on tractor below 15 horsepower. Now, suppose for manufacture of those tractors, you make some components within the factory and use the components for manufacture of the tractor below 15 horsepower, then excise duty will become payable on those components, because you are not paying excise duty on the final product. Now, that is one concept which is very much relevant in central excise and which is different from sales tax. In central excise, ownership is not relevant. The manufacturer need not be owner of the raw material. Manufacturer need not be owner of those goods which is manufacturing. But as long as he is manufacturer, he becomes liable to pay the excise duty. We will see some examples where there is no ownership of the goods, but still the person who is manufacturing the goods is liable to pay excise duty. Another concept of excise duty, which is quite different from sales tax, is that excise duty is payable on intrinsic value of the goods. Ownership is not relevant. This concept we will see in more details when we discuss about the valuation. There we will see that valuation does not depend on ownership of the raw material. So far what we saw, excise is a duty on goods. Goods means movable and marketable. Another aspect is that they should be excisable goods, that is, they must be mentioned in the Central Excise Tariff. And third requirement is that the article should be manufactured or produced, that is, new and identifiable product known in the market must emerge. However, this concept has been diluted in case of wind manufacture, that is, even if new and identifiable product does not emerge, if it is defined as deemed manufacture in Central Excise law, excise duty will become payable. Now, once it is goods, once it is excisable goods, and once manufacture is there, then duty liability starts. Then the next question is, who is liable to pay the excise duty? Normally, there are a few exceptions, but normally excise duty is payable by the manufacturer, of course, natural. Now, this section 2F, which defines manufacturer, it also does not define fully what is manufacture, who is the manufacturer. Now, it only says the word manufacturer shall be understood accordingly and shall include not only a person who employs hired labor in the production or manufacture of excisable goods, but also any person who engages in their production or manufacture on his own account. So, this is an inclusive definition. Actually, that definition really does not tell you who is actually the manufacturer. But this again, who is the manufacturer and who is liable, that law is also quite well settled. So, as per rule 4.1, duty liability is on the manufacturer. Now, there are only few exceptions to this general law. One is molasses which is produced in Khansari sugar factory. In case of molasses produced in Khansari sugar factory, the procurer, that is purchaser of molasses, is liable to pay duty. In case of goods in warehouse, certain articles are allowed to be kept in warehouse after the manufacture is over, and then they can be cleared from warehouse on payment of duty. In those cases, the warehouse keeper will be liable to pay the duty and not the actual manufacturer. And third is job work under notification number 21486. Many times a raw material supplier supplies the material to job worker and he agrees that I will be liable to pay the excise duty. If he takes such liability, then that raw material supplier will be liable to pay the excise duty. Except three cases, the duty liability in excise is on the actual manufacturer. Now, then the question is, who is the manufacturer? This again the law is quite well settled. Now, who is the manufacturer? As you saw, what is manufacturer? New and identifiable product must come into existence. So, naturally, who is the manufacturer? Manufacturer is a person who actually brings new and identifiable product into existence. So, a person who brings new and identifiable product into existence is the manufacturer, and he is liable to pay the duty. Now, let us take an example. A person is a trader. He supplies a raw material to a job worker. Now, that job worker manufactures a component or an article, or say fabricates an item out of the material supplied by the raw material supplier. Now, in that case, the job worker who is actually bringing that new product into existence is not owner of that raw material, but still it is treated that he is the manufacturer, and then he will be liable to pay the duty, though actually he does not own the raw material. So, raw material supplier is not the manufacturer. A person who actually brings new and identifiable product into existence is the manufacturer, and he is liable to pay excise duty. Ownership is irrelevant. Let us take another example of a brand name owner. Now, many, as you are aware, many large companies including Hindustan Lever, Bharat, Crompton, they do not manufacture the equipment or goods or footwear themselves. They get the goods manufactured from a small scale university SSI unit. Now, this SSI unit, he manufactures the goods on behalf of this Bata, Crompton, etc., and he also puts their, in fact, if you see the many packed commodity, you will find that the product is of Hindustan Lever, but name of the manufacturer is something entirely different. So, though the brand name is of Hindustan Lever, the goods are actually manufactured by SSI. In that case, the duty liability is not of the brand name owner, but duty liability is of the actual job worker who is bringing the new article into existence. So, raw material supplier or brand name owner is not the manufacturer as far as excise law is concerned. He is not liable to pay excise duty. Excise duty is payable on the job worker or the person who actually brings new and identifiable product into existence. Similarly, loan licensee is not the manufacturer. If you are familiar with drug industry, many times you have got a license, but you do not have manufacturing facilities. So, ask another loan licensee another manufacturer to manufacture drugs from you, and then in that case the manufacturer who actually manufactures that drug is the manufacturer, and he is liable to pay the excise duty. This again is a distinction between excise law and sales tax law. Now, then how to decide who is the manufacturer? That is, there has to be a principal to principal relationship. Now, for example, you have got a factory and you call a contractor and you tell him, you manufacture this component, I will pay you 10 rupees per piece. In that case, that contractor who is actually bringing the product into existence is not the manufacturer, because your relationship with the contractor is not on principal to principal basis. But if you have got relationship with the job worker on principal to principal basis, then the person who is actually manufacturing the goods will be the manufacturer. Now, let us take a domestic example. You give wheat to chakkiwala, and that chakkiwala converts that wheat by grinding it into wheat powder, that is atta. Now, the wheat belongs to you, but then who is the manufacturer of that atta? Who is the manufacturer of that wheat powder? You are not the manufacturer, though you are owner of the wheat. The chakkiwala or the grinder who actually converts that wheat into the powder, he is the manufacturer, and he is liable to pay the excise duty. So, if there is principal to principal relationship, then the principal who is actually bringing the product into existence will be the manufacturer, and he will be liable to pay excise duty even if the good, he is not the owner of the raw material. The last requirement is that manufacture must be in India. If the manufacturer is in India, then only excise duty will become payable, otherwise no. For example, imported goods, you import goods and then you use them in India, in that case excise duty will not be payable because they are not manufactured in India. Now, for example, luxury cars are brought in CKD packs, they are just assembled here. In that case, you cannot say that the luxury cars are manufactured in India, they are actually manufactured outside India, only they are brought in packs and then they are assembled here, and then you cannot say that it is manufactured. So, the assembly in India normally will not amount to manufacture. However, suppose you bring 80% of the components of automobile and 20% components you procure in India and then make a car, then you can say the car is manufactured in India because new and identifiable product is coming into existence. So, unless an article is manufactured in India, excise duty will not be payable. So, this covers our first pillar, and first pillar decides the duty liability, and what that first pillar says, that 4 things must be there, that is, article must be goods, goods must be movable and marketable. Secondly, they must be excisable goods. Excisable goods means they must be mentioned in the tariff. If it is not mentioned in the tariff, then excise duty cannot be levied. Third thing is that the article must be manufactured or produced, that is, new and identifiable product comes into existence, or that process must have been defined as deemed manufacture in Central Excise law. In that case, it will be deemed manufacture, and then all that manufacture must be in India. On imported goods, excise duty cannot be levied. Of course, to counterbalance the excise duty, CVD is payable if you import the goods, but that is called countervailing duty, which is equal to excise duty. But CVD is not excise duty because when you import the goods, you are not manufacturer, and then excise duty is not leviable. But to counterbalance, CVD is levied on goods imported from outside India. So, this is the first pillar of Central Excise. Unless all these requirements are satisfied, excise duty cannot be levied. Now, once you decide that activities manufactured, they are goods, they are excisable goods, that manufacture is taking place in India, then yes, excise duty liability starts. Then next question is, at what rate I have to pay the duty and on what value I have to pay duty. Now, that rate of duty is determined on the basis of classification of a product. You see, and valuation tells you on what value that rate should apply. So, there are 2 pillars, one is classification, other is valuation. Now, as you know, there are thousands and thousands of products. It is not possible to list all items and then state duty for each product. It is just practically impossible, and new identifiable products are also coming in market every day. So, it is not just physically impossible to list all the items, and then the only thing possible is that all the goods which are manufactured or imported are classified into various groups and subgroups, and this is exactly what is done in Central Excise Tariff or Customs Tariff. All the goods are classified and sub-classified, and then rate of each such sub-classification is specified. That is the basic principle of classification. Now, this tariff specifies the rate of duty payable on each article. There is Central Excise Tariff Act, which specifies excise duty rate, and Customs Tariff Act, which specifies the customs rate. Now, this tariff is termed as Harmonized Commodity Description and Coding System, HSN, and that system has been developed by World Customs Organization, and this HSN system is followed by almost all countries in the world to have uniformity in world trade, because if each country decides to classify the goods in their own fashion, then world trade will be very, very difficult, and that is why to have uniformity in world trade, the World Customs Organization had divided HSN, Harmonized Commodity Description and Coding System. Now, this HSN is based on International Convention of Harmonized System of Nomenclature. This is universally accepted by almost all the countries. Now, Indian Customs adopted this HSN with effect from 28th February 1986, and Central Excise Tariff was also adopted to HSN based classification with effect from 1st March 1986. Now, this international HSN is a 6-digit classification, but indigenously you are allowed to add more digits. So, in India we adopt those 6 digits plus add 2 digits of our own. So, Indian tariff, custom tariff as well as central excise tariff is a 8-digit classification of goods. Now, all the goods are first classified into sections, and then from sections to groups, and from groups to subgroups, and from subgroups to subgroups. Now, this arrangement of a tariff is similar to a menu in a hotel. Now, for example, if you go to a hotel and all the products are arranged alphabetically, it will be practically impossible for you to select an item. For example, tomato soup will go in 2, while vegetable soup will go in V, roti will go in R, and naan will go in N. With this type of menu, it will be practically impossible for you to select an item, and that is why in a hotel all products are first classified into major groups, like say Chinese, Punjabi. Then within Chinese, rice dishes are separate, vegetable dishes, soup dishes are separate. So, that is how products are classified from main items to sub items to sub items. Exactly same principle is applied in central excise tariff or customs tariff also. All goods are classified in 20 broad sections, like say textile section, electricity, food articles. So, there are some 20 broad sections in which all the products are classified. There are 21 sections in custom tariff and 20 sections in excise tariff. So, first products are classified into sections. Then sections are divided into chapters. There are 96 chapters in central excise and 98 chapters in customs tariff. For example, textile. Textile is one section which is classified into various chapters, like say cotton textile, rayon textile, woolen textile, nylon textile and all that. So, that section is divided into groups, and then those groups, they are called chapters, and then chapter number 77 is kept blank in both the tariffs. Each chapter and sub chapter is further divided into various headings depending on different type of goods belonging to same class or products. Normally, same class of products are identified in a particular chapter only. The tariff is designed to group all goods relating to same industry and all the goods obtained from the same raw material under one chapter in a progressive manner. That is how scientifically this tariff has been designed. Now, this central excise tariff is all the goods are classified into various groups and subgroups, and 8-digit classification is used. The first 2 digits indicate the chapter number. 2 more digits are added to make headings. Thus, headings have 4 digits. Further 2 digits are added for sub-classification, which are termed as subheadings, and last 2 digits are added for sub-classification, which is termed as tariff item. So, tariff item is a 8-digit item. Rate of duty is indicated against each tariff item and not against heading or subheading. Now, of course, all the products are scientifically classified and subclassified, but in addition there are rules which are given in the tariff itself of interpretation of rules. They are called GIR, that is General Interpretive Rules, and these general interpretive rules have to be applied for classifying a product. Now, for example, actually classifying a product is not a simple job at all. It is a highly technical matter, because there are chapter notes, section notes. So, you have to read section notes, chapter notes, then only you can classify your product properly and scientifically. But there are some principles which are evolved, and some principles are given in the rules of the, they are called GIR, and you have to apply those rules, and then you have to particularly classify the product. Now, of course, these rules are quite exhaustive. It is not possible to give all the rules, but basically they apply one of the basic rule is that essential character, that is the essential character of the goods determines the rate of duty or determine the tariff. I will give some simple example. What is the essential character of the goods? Now, for example, you purchase a software, and that software comes along with a manual, which is sort of a book. Sometimes you purchase a book, there also there is CD, which is which gives some examples, illustrations. So, in both the cases you purchase a software with a book, and you purchase a software where there is some CD attached. Now, in both cases there is a book and a CD, but then you have to go by the essential character. If the essential character is software, then you will have to classify it as a software. If essential character is book, then you have to classify it as a book. These are, I am just giving you for some example. Now, for example, bearing, a simple example. Now, bearing, the bearing can be fitted in automobile, it can be fitted in machinery, it can be fitted in compressor. Now, you cannot say that the bearing is fitted in automobile, it will be called an automobile part. If bearing is fitted in compressor, it will be treated as a compressor part. This is not a, this is just not possible. So, then you have to go by the specific description, that is bearing is a specific description, and then that item will have to classify as a bearing and not as an automobile part. I am just giving you some illustrations to tell you how complicated or intricate it is to decide tariff at a classification of a product. But this classification is required so that you can determine the rate of duty, because rate of duty is given in the Central Excise Tariff itself. Normally, in about say 80-70% of the cases, it is 12.5%, general rate is 12.5%, but there are various rates, 6% rate is there, 2% rate is there, rates higher than 12.5% are there. So, when we say excise duty rate is 12.5%, it is a general rate which is applicable to about 60-70% of the items, but rate which is applicable to each item is given in the tariff itself, and that tariff has to be read along with the rules. Then only you can scientifically classify an item and decide its rate of duty. So, classification gives you the rate of duty, but whatever rate that is given in the tariff is called a tariff rate, that is rate as specified in the tariff. However, government can grant exemption from excise duty. Such exemption can be partial or complete. It may be conditional or unconditional, and such exemption can be given by issue of a notification. And section 5A(1) of Central Excise Act and section 25(1) of Customs Act empower government to issue notification to give such partial or full exemptions. So, tariff has to be read along with the exemption notification to find exact rate of duty. So, tariff gives you tariff rate, while the actual rate at which you have to pay excise duty is called effective rate, and that effective rate is given by exemption notification. Now, these exemption notifications are issued by government by notifying in the official gazette. They become effective on the date they are issued. That is, even if they are published in gazette later, they become effective on the date it is issued. And in fact, today the practice is that first as soon as they are issued, within 15 minutes they are uploaded on the CBEC website. So, as soon as they are issued, they are uploaded and they become effective. You do not have to wait till they are actually printed in the gazette. Now, this notification is subordinate to act. So, notification cannot be issued with retrospective effect. Now, this indirect CBEC has a very excellent way of giving number to a notification. Now, for example, 8/2003 CE. CE means it is a Central Excise notification. 2003 means it was issued in 2003 and it is serial number. So, it is easy to identify and refer. CENT means Central Excise non-tariff. CUS means it is a customs notification. CUS means customs non-tariff and ACR means it is a service tax notification. So, it is easy to identify a notification. So, tariff rate is as prescribed in tariff. Effective rate is as specified in exemption notification. It may be nil also. So, nil duty means the tariff itself specifies that the duty is nil. But exempt from duty means tariff says that there is duty, but it is exempted by way of a notification. Now, such exemption can be full or partial, it can be conditional or unconditional. Now, the most important exemption notification, of course, there are many notifications, but one normally referred to is SSI exemption, that is 8/2003 Central Excise. This gives exemption to small scale units whose turnover in previous financial year was less than 1.5 crores. In addition, there is another exemption notification to goods manufactured in backward areas like northeastern region, Jammu and Kashmir, Sikkim, Kutch. Goods supplied by EOU, they are also exempted by way of a notification. In addition, there is one huge mega exemption notification which exempts many items from excise duty subject to various conditions. Now, these exemption notifications are practically part of tariff, because just by referring to tariff you cannot determine the exact duty. You have to refer to tariff and then read it along with the exemption notification, then only you can find out the exact rate at which you are liable to pay the excise duty. Now, one important exemption notification is 8/2003 dated 1/3/2003. So, unit whose turnover was less than rupees 4 crores in the previous financial year are entitled to full exemption up to first rupees 150 lakhs in the current financial year. However, if goods are manufactured by an SSI with brand name of others, then they are not eligible for SSI concession and they have to pay duty right from 1st April itself. However, if such branded goods are manufactured in rural area, then such small units can claim exemption up to 150 lakhs even if the brand name does not belong to them. This provision has been made because many small scale units manufacture goods under brand name of large unit and they get advantage of that brand name, and that is why government felt that it is not necessary to give SSI exemption to such manufacturers. Of course, there are many exemption notifications, it is not possible to discuss all. So, the classification read with exemption notification tells you the rate of duty, exact rate at which you have to pay duty. So, first pillar is duty liability, second pillar duty liability tells you whether duty is payable or not payable. Once duty liability is payable, then second pillar is classification, which tells read with exemption notification, that tells you the exact rate at which the excise duty is payable, whether excise duty is payable or not. If there is some concession, then are there any conditions? There can be some conditions, only subject to those conditions exemptions will be available. If you do not fulfill those conditions, that exemption will not be available. So, tariff read with exemption notification tells you the excise duty rate at which you are liable to pay excise duty. So, this is the second pillar, and third pillar is the valuation. Now, after determining that excise duty is payable, rate of excise duty is found out on the basis of Central Excise Tariff Act read with relevant exemption notification. After that, you have to decide value, that is value on which excise duty is payable. Now, for example, when you say excise duty rate is 12.5%, but 12.5% of what? And that 12% is termed as value or assessable value. So, how to determine that assessable value? That is actually the third pillar of Central Excise. Now, excise duty is payable on various bases, on one of the following bases. There cannot be one formula for all. So, there are various bases on which excise duty can be levied. One is specific duty. It is based on some measures like weight, volume, length, etc. For example, sugar, it is payable, the duty is payable on the basis of weight. Cigarettes, excise duty is payable on the basis of length of a cigarette. So, these are called specific duties. They are based on weight, volume, etc., liter, etc. But this is easy to administer because there cannot be any dispute about valuation. You just find out the weight, pay duty, you just find out the length, pay duty. So, specific duty are very simple, but of course, it is not possible to decide specific duty rates for all items. Only few items are there for where specific duty has been prescribed, and then on that their duty is payable on the basis of that parameter like kg weight, volume, length, etc. Another mode of levy of excise duty is as percentage of tariff value, and that tariff value is fixed under section 3(2) of Central Excise Act. Now, the concept of tariff value is when the rates vary widely. If the rates are varying, prices are varying widely almost on day-to-day basis, then it is practically impossible to find out the tariff rate. Now, for example, oils, imported oil, the prices vary almost on day-to-day basis. It is just not possible to rely on the price which is given in the invoice. In that case, government declares a tariff value. That means government says this is the value, and then you pay excise duty based on that. For example, gold prices vary day to day basis. Now, it is just not possible for government to levy excise duty on gold on the basis of prices, because they are vary so widely. Then there is a tariff value of gold is so and so, you take this value and pay custom duty, forget about the actual price. So, that is the second mode. Of course, this again tariff value method is not universal, they can be applied selectively only for few commodities. Next is duty based on production capacity. This duty is levied under section 3(a) of Central Excise Act. Now, here the duty is payable on the basis of production capacity of that factory, not on the actual production. Actual production may be more or less, but they decide that this is the production capacity of that factory, and then the factory is required to pay excise duty on the basis of that production capacity, irrespective of the actual production. This is given in section 3(a) of Central Excise Act. Fourth way of levy of excise duty is duty based on MRP, that is maximum retail price printed on carton after allowing deductions. So, this is called MRP based valuation. This is under section 4(a) of Central Excise Act. As we saw, there are about 144 items which are covered under MRP valuation provisions. In that case, excise duty is payable not on the basis of selling price, but on the basis of MRP which is printed on the carton. And then some abatement is granted on the basis of MRP, and for that there is a abatement exemption abatement notification. Now, for example, say footwear, let us say that the abatement available is 30%. In that case, if the MRP printed on that footwear is 1000, then excise duty will be payable on 700 rupees. Then that footwear he may be selling to wholesaler at 600 rupees or 800 rupees. It does not matter, excise duty will be payable on 700 rupees. Here again this is a simplified method, there is very little scope for manipulation. So, these are the methods which can be applied to specified products like specified duty, tariff value, production capacity basis, MRP basis. If the product is not covered under any of these 4, then excise duty is payable on as a percentage on the basis of assessable value, and that assessable value is fixed under section 4 of Central Excise Act, and that is called ad valorem duty. Now, this you have to remember that section 4 is a residual section, that is, if the valuation is possible under any of the first 4, then you have to follow that method. Only if any of the first 4 method your product is not covered, then you have to go for valuation, that is on the basis of ad valorem. Now, in case of about 144 products, duty is payable under section 4A of Central Excise on the basis of MRP printed on the package after allowing abatement at specified rates. MRP should be inclusive of all taxes and duties. As you know, when you any packaged commodities, there is packaged commodities rules, and that MRP which is printed on that package must be inclusive of all taxes and duties, and that MRP is taken as the base for excise valuation also. Now, for example, if MRP is rupees 100 and abatement for that product is 35%, then value will be rupees 65 for excise purposes irrespective of actual sale price. And suppose excise duty rate is 12.5%, then you have to calculate 12.5% on the basis of 65. So, here this MRP method is selected because here the chances of manipulation are very less. The provision of MRP valuation applies only when product is a package intended for retail sale and is specified in a notification issued under section 4A. That is, even if the product MRP is there, but if it is not specified in the notification, then MRP valuation provisions will not apply. Now, MRP provisions are overriding provisions, that is, once the MRP provisions are applicable, then you cannot value on the basis of section 4, that is ad valorem. Even for job work, that is, suppose you say footwear. Now, footwear is covered under MRP valuation provisions, and if that footwear is manufactured by a job worker and he puts MRP, then the job worker also will have to pay excise duty on the basis of MRP and not on the basis of his selling price. Now, even in case of products covered under section 4A, where MRP provisions are not applicable, valuation will be on the basis of section 4. Now, for example, wholesale package, if it is a wholesale package, then MRP provisions do not apply, then you have to pay excise duty on the basis of assessable value section 4. Industrial sale, industrial consumer sale or institutional consumer sale, MRP provisions are not applicable, you have to pay sale directly, then valuation will be on the basis of section 4, that is on assessable value and not on the basis of MRP. But if it is a package intended for retail sale and you have to put MRP, and if that product is covered under that MRP notification, then excise duty will be payable on the basis of MRP. So, another method of payment of excise duty is called a composition scheme, that is a simplified scheme. So, compounded levy scheme, it is under rule 15 of Central Excise rules, and it provides for payment of duty on the basis of production capacity. It is an optional scheme and it is not compulsory. The scheme is presently applicable only to stainless steel patta and putties and aluminium circles. So, these articles are not eligible for SSI exemption. So, as you know, this compounded levy scheme is not practically not much used by government at all. Next method is duty on the basis of production capacity. Section 3A of Central Excise Act provides for payment of duty on basis of production capacity without any reference to actual production. Production capacity will be determined as per rules. Now, this scheme is compulsory. See, compounded levy scheme is not compulsory, but section 3A scheme is compulsory. That is, if you are manufacturer of those items, you have to pay duty only on the basis of production capacity, not on the basis of actual production. Now, what are the items covered under production capacity? Pan masala, gutka and chewing tobacco. These are the products covered under production capacity base. And why these are covered? Because these are very prone to evasion. These products are very prone to evasion of excise duty, and lot of excise duty evasion actually takes place. To avoid that, they had devised the idea that instead of trying to calculate actual production, they say you pay excise duty on the basis of production capacity and be with it. Now, if factory is closed for 15 days or more, then they give reduction. Even if you have got 10 machines, machine wise you can close the machine, get it sealed from the excise inspector, and then on that machine then you will not be liable to pay the excise duty. So, only these are the three items which are very prone to excise duty evasion. They are covered on the production capacity, not all items. So, these have very restricted usage. Another is tariff value. In some cases, tariff value is fixed by government. This is a notional value for purpose of calculating the duty payable. Once tariff value for a commodity is fixed, duty is payable as percentage of this tariff value and not the assessable value. This is fixed under section 3(2) of Central Excise Tariff Act, Central Excise Act. This again is a very rarely used. For example, in customs, tariff values are fixed for edible oils because the prices vary widely almost every day. Otherwise, this tariff value is not much used. Now, if your product is not covered under any of the earlier methods, then you have to pay excise duty on the basis of assessable value. So, assessable value is the residual method of valuation. In this case, duty is payable on the basis of value as per section 4 of Central Excise Act. Now, this section 4 has been very well drafted and rules are also well drafted to avoid manipulation of the value. Now, if you see all the rules and section, you will find basic principle in excise valuation is that excise duty is payable on the intrinsic value of the goods. Ownership of the goods is irrelevant for the purpose of excise duty, and this principle is quite evident in section 4. Now, normally transaction value means selling price. So, transaction value can be accepted as assessable value under section 4, but what are the conditions? That is, the goods should be sold at the time and place of removal, that is, there should be sale at factory gate. Secondly, buyer and seller should not be related. If buyer and seller are related, then naturally manipulations in value are possible, and in fact that is also the concept in transfer pricing, that is the concept in customs valuation also, that if the buyer and assessee seller are related, then that price cannot be considered, and that concept of transfer pricing is brought in Central Excise also by this provision, that if buyer and assessee or seller are related, then transaction value cannot be accepted. Next is price should be the sole consideration for the sale, that is, price should be the only consideration. Now, for example, I am manufacturer of a machinery and that value of the machinery is say 1 lakh. Then my customer tells me, okay, you manufacture the machine, I will supply you the steel. I will supply you the steel and then you sell me at lower price. And then okay, so I say you supply the steel, then I will supply the machinery at 80,000, I will not charge you 1 lakh. In that case, excise duty cannot be paid on 80,000 basis, because 80,000 is not the sole consideration. What is the consideration? Other consideration, that is free supply of steel, that is the other consideration, and then by adding that the total value will become 1 lakh, and then I will have to pay duty on 1 lakh, though my invoice shows only 80,000. So, the third condition is that price should be the sole consideration. Now, each removal will be treated as a separate transaction and value for each removal will be separately fixed. Thus, you can have different prices for different types of customers. Suppose you have got more turnover, you can give less price, less turnover, you give more price. So, price variations are permissible so long as they are genuine. Discounts are also permissible, varying discounts are also permissible so long as they are genuine and based only on the commercial considerations. If there are some underhand dealings, then they will of course not be allowed. Now, this transaction value, excise duty is payable on transaction value, which is normally accepted as the assessable value. Now, this transaction value is exclusive of taxes, that is amount of duty of excise, sales tax and other taxes are excluded, that is excise duty is payable on the net price exclusive of taxes. Only taxes actually paid or payable are allowed as deduction. Now, if goods are cleared without payment of excise duty, then that price is to be taken as cum duty price, and then excise duty payable is to be calculated by back calculations. So, transaction value is that value which is exclusive of all the duties including excise duty. Now, what are the items which are included in the assessable value as per section 4? Packing charges and design charges relating to machinery or equipment, they are includable in the assessable value. Price escalation, if suppose price increases after there is some price escalation clause in big machinery, then if there is price rise due to this escalation clause, excise duty will be payable on that, but not when price was fixed at the time of clearance. Interest will become payable. Now, suppose today you pay excise duty on 100 rupees and then subsequently price rises there 120. So, you have to pay differential duty on the 20 rupees. In addition, you have to pay interest on that excise duty, because you should have paid that when in the initial stages itself. So, if there is some price rise, you have to pay excise duty and interest also. Now, transport charges up to place of removal are includable in the assessable value. Now, this place of removal is a very litigation prone issue on in the excise law, but there is a recent Supreme Court decision that place of customer cannot be the place of removal. So, practically as per this Supreme Court decision, factory is the place of removal, and all expenses beyond factory cannot be included in the assessable value. So, X works price is normally treated as the assessable value. Earlier there was a lot of difference of case law that even customer's place could be treated as the place of removal if sale takes place, but this recent Supreme Court decision has uprooted all the earlier case law on this issue. Notional interest on advances is includable only if there is evidence that it has depressed the selling price, otherwise notional interest is not addable in the assessable value. Now, what are to be excluded from the transaction value? Any trade discount is allowable. The trade discount may be varying so long as it is genuine. Cash discount is allowable as deduction, but it has to be given at the time of removal, because in Central Excise valuation has to be done at the time of removal from the factory. So, if the cash discount is given at the time of removal, then it is allowable. If you give it later, theoretically it is allowable, but practically it is very difficult, because then you cannot value the goods at the time of removal from the factory. Taxes are not included in the assessable value. Outward freight after place of removal, it is excluded from the value. Erection and commissioning charges after clearance from the factory, they are excluded from the value. Now, if transaction value is not acceptable, then valuation is required to be done as per valuation rules. Now, there are various valuation rules, we will not go into details, but major part is valuation can be done on the basis of such goods, that is similar goods, if the price of those goods particularly are not available. Now, for example, samples. Now, samples price is not available, in that case you have to pay excise duty on the prices of similar goods. Now, if price is not sole consideration, then excise duty is payable on the basis by adding the consideration. Now, for example, a job worker. Now, job worker raw material supplies the raw material and he is only doing the processing. So, the raw material does not belong to him, but even then he is liable to pay excise duty on the basis of the total price of the goods, including the raw material cost, profit and example. Now, for example, if raw material supplies the goods at say 100 rupees, the job charges are 20 rupees for converting that raw material into pieces, and that raw material supplier is selling the goods in market at 200 rupees, then that job worker will be required to pay excise duty not on 100, not on 120, but on 200 rupees, because that is the intrinsic price of the goods. So, again that is why I repeat that ownership is irrelevant in central excise. In related party transactions also there are valuation rules. In case of depot sale, we will not go into detail, but you have to remember that in case of depot there is no sale at the factory gate, and that is why provisions have been made in the valuation rules to determine the value for the purpose of central excise. In case of captive consumption, again there is valuation provision. As we saw, excise is a duty on manufacture, sale is immaterial. That is why if you manufacture the goods and you use it within the factory or your own factory at different place, in that case you have, this is called captive consumption, and then excise duty is payable on cost of production plus 10%. This cost of production should be calculated on the basis of CS4. So, these are we have of course, valuation is not as simple as looks like, but principally you have to remember one thing, that excise duty is payable on the intrinsic value of the goods irrespective of the ownership price at the time of removal from the factory. If there is sale from to unrelated buyer, then that can be considered for the purpose of excise valuation. Another very interesting concept in central excise is of job work, because excise duty is on manufacture, duty will be payable even if goods are manufactured on job work basis, and duty will be payable on intrinsic value of the goods. Now, as per rule 10A of valuation rules, duty is payable on the basis of price at which raw material supplier sells the finished products in the market. The example which I told you just now, कि raw material supplies you raw material at 100 rupees, the job worker charges 20 rupees for converting into finished product, and that product is sold by the raw material supplier at 200 rupees, then excise duty will be payable by the job worker, but on 200 rupees. If product is covered under MRP, then job worker is required to pay duty on the basis of section 4A, that is MRP valuation, not on the basis of his selling price. Now, job work basically it is dutiable, but it is exempt if raw material is sent to job worker under Senvat credit rule 45A. That is, if you are a manufacturer, you want some components to be made, you do not have that capacity within your factory, you send the raw material outside, get it done from a job worker, bring it back and use it. That is permissible under rule 45A. In that case, that job worker is not required to pay excise duty. The job worker is exempt if material was sent under notification number 21486. In other cases, the job worker is liable to pay the excise duty. Now, service tax is payable on job work. If the job worker result into manufacture, then excise duty becomes payable. If the job work does not result into manufacture, then service tax will become payable. So, service tax is payable on job work if activity is not manufacture or material is not sent under Senvat provisions. In that case, service tax will become payable. So, this is the third pillar which we saw, that is duty liability, classification and valuation, and the fourth pillar is we saw Senvat or VAT. Now, again VAT we are going to see only the basic concept, because VAT again is a quite big concept, and in excise it is called Senvat, Central Value Added Tax. Now, VAT is tax on value added. So, broadly value added is the difference between value at the output stage and value at the input stage. The concept of Senvat or VAT can be understood by simple illustrations, which the table you must be seeing on your screen. See, this is the conventional mode of tax on goods, that is A sell goods to B, B sell goods to C. Now, let us say he is the primary manufacturer, he is selling the goods at 100, he tax rate is 10%, then he will be selling the goods to B at 110. Now, B will be purchasing the goods from A at 110. He will do his own value addition of say 40 rupees and he will be selling the goods at 150. Again he will have to charge tax at of 15 rupees and he will be selling at 165. C will be purchasing from B at 165. He will do his own processing, profit, etc. let us say 35 and he is selling the goods at 200 rupees. Again he will have to pay tax of 20 rupees and he will be selling the goods at 220 rupees. Now, this is the conventional mode of taxation on goods. Now, as you see from the simple table, B is selling the goods, B is paying tax of 15 rupees, though his actual value added is only 40 rupees. He is paying tax on 100 rupees on which A has paid the tax, B is also paying tax on 100 rupees. Again he is paying tax on 10 rupees, that is tax on tax. If you see the invoice of C, again he has to pay tax on 100 rupees on which A has paid the tax, B has paid the tax, again on 100 rupees C is paying the tax. So, this is called cascading effect of taxes or snowballing effect of taxes, and such type of tax structure completely vitiates the tax structure because it depends on the number of stages. More the stages, more the tax burden, and government also does not know how much tax it is collecting. Now, for example, in the simple here we saw, let us say C is exporting the goods and government wants to encourage exports by removing the taxes. And now if government tells C, okay, you clear the goods without payment of taxes, without payment of duty. Now, in that case, has the product become tax free? No, because C may not pay 20 rupees, but on the same product earlier C has directly or indirectly paid 10 rupees and 15 rupees and that tax is gone. So, exports cannot be made tax free, poor man's consumption cannot be made tax free. So, this type of tax structure is not suitable in modern manufacturing technology, because in modern manufacturing technology product passes through many stages, from distribution stages also. Then they said, okay, this type of tax structure is not correct. Then what to do? Then they say B should pay tax not on 150, he should pay tax only on 40 rupees. C should pay tax on 35, not on 200. If we are able to achieve that, then there will be no cascading effect, no tax on taxes. Now, then they came out with the idea of a tax credit system. See, in this table on the left hand side you are seeing the earlier mode, that is without VAT, that is A is selling at 110, B is purchasing from A at 110 and selling at 150, paying tax on 150. Now, under the same transaction under VAT, how it will look like? Under VAT, what government tells B, okay, you purchase from A as usual at 110, you pay 110 to A as usual, but I will give you credit of 10 rupees. That is, B has paid 110 to A, but he is going to get credit of 10 rupees. So, his net purchase price is only 100. His value addition continues to be 40. He will be selling at 140 and on 140 he will charge tax of 14 rupees. So, total is 154. Now, you see B's invoice shows tax of 14 rupees, but actually he has got credit of 10 rupees and effectively he is paying tax of only 4 rupees, which is 10% of 40. So, by this simple tax credit system we have ensured that all the cascading effect is gone and tax is actually paid only on the value added and not on the entire transaction. So, then the tax burden does not depend on the number of transactions. Similarly, product can be made tax free. Now, for example, in this case government tells B, you don't pay 14 rupees. Then the whole product becomes tax free because total tax burden is 14 rupees, out of which 10 is paid by A and 4 is paid by B. So, exports can be made tax free, poor man's consumption goods can be made tax free, which was not earlier possible. So, these are some of the highlights of CENVAT, that is instant credit is available, one-to-one correlationship is not required. You get CENVAT credit of input goods, of duty, excise duty paid on inputs, service tax paid on input services, and excise duty paid on capital goods. So, CENVAT works on destination principle. CENVAT credit is available only on the basis of eligible documents like invoice, dealer's invoice, bill of entry, supplementary invoice, etc. However, Xerox is not permitted. It has to be original document. So, these are the 4 pillars. Now, of course, other things are there, but these are not important. Now, there are some core procedures in Central Excise, that is everybody must register in Central Excise. That registration number is a PAN based number. He must maintain a daily stock account of production and clearances. Goods must be cleared under invoice. Duty is payable by monthly, and in case of small assessees it is quarterly, and you have to maintain records and file returns. There are some other procedures which are specific, like for exports, for receipt of goods for repairs. There is some procedure for provisional assessment, warehousing, adjudication, appeals and settlement, but these are not routine procedures. These are to be followed only as and when required. So, here I conclude by giving you basic overview of Central Excise. If there are some queries, they are welcome. Thank you.
We have received a host of questions from our, and to start with, the first question we received was that what are the exemptions available under Central Excise?
There are about 150 exemptions, not possible to tell you all. Basically, the SSI exemption is there, EOU is there, area based exemption there, and there is one huge mega exemption notification which exempts about 200 items. There are some exemptions where you have the partial exemption is there, that is you have to pay 1% duty and 2% duty. So, unless you see the exemption notifications, you cannot often decide.
Okay. So, the second question received was that if goods are manufactured at Rajasthan and dispatched to a distributor who is an unrelated party at a depot located in Ambala, which is in the state of Haryana, say at a rate of rupees 100, and after about 2 months they are sold by the depot at rupees 110, then in that case what will be the value on which excise duty is to be paid?
Excise duty is payable on 100 because in excise price at the time and place of removal, that is relevant. So, if price at the time of removal from the factory was 100, and then even if later at the depot, that the depot price at the time of removal from your Rajasthan factory should be 100. Now, later the price may increase and later you may sell it at 110, then differential excise duty is not payable. But that 100 should be the price at the time of at that depot at the time of removal from the factory. So, subsequent variation does not make difference.
So, what will be the treatment in case of clearance of goods from EOU to DTA?
EOU will have to pay excise duty which is more than normal excise duty, but less than custom duty. Actually, EOU are allowed to bring goods without payment of custom duty. So, normally when they clear in DTA, they are supposed to pay custom duty, but then it will make the product very costly, and that is why they have to pay 50% of the custom duty plus excise duty. So, it is slightly more than the normal excise duty, but lower than the custom duty.
So, you spoke about job worker. So, can registered dealer send any material to job worker for the process which does not amount to manufacture?
Registered dealer, of course he can send, but the job worker will have to pay service tax. If the process does not amount to manufacture, then that job worker will be liable to pay service tax. If it amounts to manufacture, then the job worker will be liable to pay excise duty on the total intrinsic value, as we saw.
So the Government of India has come up with various incentives for startups. So are MSMEs eligible for any exemptions under Central Excise? And if so, what is the procedure for claiming the same?
No, that we saw that small scale industry exemption is available up to 150 lakhs. Now, as long as your turnover is less than 150 lakhs, you don't have to follow any excise procedure, you have to maintain your own private record. But once you cross your turnover of 90 lakhs, then there is a declaration in the prescribed form that you have to submit to excise authorities. But even then at 90 lakhs you don't have to register, only you have to make a declaration. Once you cross 150 lakhs, then you are liable to pay excise duty.
So does invention amount to manufacture? For example, X has invented something which is not present in the Tariff Act and has distinct character. Will the invention be liable to something?
If invention is in physical form and if a new and identifiable product is coming physically, then of course excise duty will pay. But invention is only on the drawing board, that is only imagination, then surely it is not goods because it is not movable and marketable. In that case, that invention may be patented. If you patent it, then that patent can be sold, but it is not, you cannot say that it is manufactured.
So there is lot of hue and cry by the jewelers regarding the Finance Act 2016. So if you could throw some light about the amendments in the Central Excise Act with respect to manufacture of jewelry.
You see, jewelry is a very specialized business. That is, many of the concepts of Central Excise are generally very difficult for jewelers. Now, because for example, job work. Now, many times a customer comes, he says, this is my gold, and then you convert it into ornament. Now, theoretically it is manufactured, and as we saw that in case of job work also, excise duty is payable on the intrinsic value of the goods. That is the gold supplied by the customer plus his job charges plus his profit. On that entire amount, legally excise duty will become payable, and that is not possible for, then that it will be a very huge duty liability on sub job charges, because in another problem with gold is that there is huge amount of smuggling, and number 2 business in going on smuggling, and that is why jewelers are reluctant to come under Central Excise. That is why at present what government has told them, you just pay on the basis of your VAT return. You forget about captive consumption, you forget about job work, you forget about all other rules as far as Central Excise is concerned. You are anyway paying VAT on the same value. At present you pay excise duty, will not ask you any question about job charges, will not ask you any question about, because you see you give for free samples, etc. All these issues come in excise. So at present they have given relaxation, you just pay on the VAT and you forget about it. Then they have appointed a committee, and that committee will study the problems of the jewelers and then come out with practical solutions. At present government has given them a very practical solution, that you just pay excise duty on the basis of your VAT return, no questions asked. No, I don't think any further relaxation is possible.
So the next question is, what is the difference between intermediary goods and captive consumption?
Generally, intermediate product means you make, for example, the example which I gave you, you are an automobile manufacturer. You manufacture some automobile component and you use it in the manufacture of automobile, then it is an intermediate product. No, but for example, if you have got some steel cupboard, steel plates, etc., that steel plate you manufacture, say, cupboard, and that cupboard you use it inside your factory. Or you manufacture a machinery and that machinery you use it within the factory. In that case, that machinery or that cupboard you can call it as captive consumption, that is, you are using it within the factory, but it is not an intermediate product which you are using it in your final product. Intermediate product means something you are using it in your final product. Captive consumption means you don't actually use it in your final product, but you use it within the factory or you use it within the office.
So next question which has come up is, let's suppose A manufactures machines which are to be assembled and put in use. He sends the unassembled machines to its dealer B who assembles the same and sells it to C as an assembled machine for installation as immovable machine. So, is excise duty leviable in this case?
Excise duty is leviable by A only, because actually B is not manufacturer of machinery. Machinery is manufactured by A himself. Only for transport convenience he is sending in different parts.
Knockdown condition.
Knockdown condition. CKD condition. They are called completely knockdown or semi knockdown condition.
So, is electricity excisable goods?
Electricity is goods, but at present there is no excise duty on that. But theoretically, duty can be levied if government wants.
Sir, are software liable to be dutiable under Excise Act?
Yes, software actually, if it is there are two types of software: package software and tailor-made software. Package software means like Windows, Tallies, etc. You purchase off the shelf where MRP is printed. If MRP is printed on such software, then it is excisable good and excise duty is payable. If it is not covered under MRP, that is tailor-made software, then if it is in the physical form, then excise duty will not be payable, but VAT will become payable.
So, will refurbishing amount to manufacture?
Refurbishing normally will not amount to manufacture, because new and identifiable product does not come into existence. But it is possible. No, for example, if you have got an old table, you just dismantle and manufacture some entirely different type of table, then it is new and then it is new manufacturer items coming into existence. It depends on the facts of the case.
So, the value of goods under central excise, does it require to be certified by some valuer?
No, there is no such general provision unless audit is ordered. Valuation audit can be ordered. In that valuation audit can be ordered, then you can be asked to. Only certification is required for CS4, that is cost of production. If for captive consumption you have to pay excise duty on the basis of cost of production, that has to be certified by cost accountant or a chartered accountant. Except that there is no general requirement of valuation unless audit is ordered.
So, what are marketable goods?
Marketable means which market accepts as a commodity which they can buy and sell. I will give you some simple domestic example. Now, you take atta and you add water and you make dough. Now, dough, new and identifiable product has come into existence, because the dough is different from the flour. Flour is different, that dough is different. But that dough is not marketable, because in market nobody buys that dough. So, that dough may be different product, but it is not goods because it is not marketable. But once you convert it into chapati, it becomes a marketable product. I mean, this is a simple illustration to tell you the difference between goods and marketable commodities goods. So, if it is just because new product comes into existence, but if it is not acceptable in the market, then it will not be goods.
So, how do we differentiate between waste, scrap and byproduct?
Actually, this is a matter of degree. Byproduct is generally accepted as a product in itself. That is, for example, if you manufacture sugar and molasses comes out, molasses is a byproduct because that product itself has a market value. But many times waste comes out, waste as such is not useful, you have to somehow remelt it, then only you can use it. So, that is a matter of degree. If it can be used normally, if it can be used as such, then you can term it as a byproduct. But in both the cases, excise duty law does not make any distinction between byproduct and waste and scrap. If it is sellable, it is goods and excise duty will become payable.
So, some goods are exempted from central excise, but the same are liable to state VAT. So, what will be the position in case such goods are traded between different states?
I cannot imagine what he has in mind. But if it is VAT, then only VAT will become payable. Then excise law doesn't come into picture at all if the goods are not excisable. Particularly what item he has in mind, I cannot make out.
So, this one is quite interesting. It says cow dung. If it is sold, will it be covered under excisable goods?
Theoretically, yes. If it is mentioned in the tariff and if excise duty rate is mentioned, then theoretically it is possible because it is produced. Cow dung is produced. So legally, yes, there is no legal bar in imposing excise duty. Of course, it is not imposed, that is a different issue. But there is no legal bar in imposing duty.
And related to it is that is compost an excisable good?
Yes, because new product is coming into existence. Of course, it is not dutiable at present, but legally there is no bar.
So next question comes that does repacking of imported goods in compliance with the labeling requirements amount to manufacture?
If it is covered under MRP valuation provisions, then putting MRP is actually a deemed manufacture, and then excise duty will become payable. But in case of imported component, if you import them in a package form, then at the time of import itself it has to bear MRP, otherwise the clearance from customs is not allowed. But if you import wholesale and then pack in India and put MRP, and if that product is covered under MRP valuation provision, then excise duty will be applicable.
So the last question for the day that we have received is that can Senvet credit be claimed against excise paid on vehicles? Can Senvet credit be claimed against excise paid on vehicles?
No, the motor vehicle is not eligible for Senvet credit. There are very few manufacturers to whom that is Senvet credit of motor vehicles is available. Otherwise, Senvet credit of excise duty paid on motor vehicles is not eligible for Senvet credit.
Okay, so that's it, sir. Thank you so much, sir, for sparing your valuable time and making such a concise and crisp presentation on Central Excise, and also for answering all those queries of our participants. We sincerely believe that our participants have greatly benefited during the entire session. Friends, the next webinar in the session will be on service tax, basic concepts and professional opportunities in service tax. It will be on at 3 p.m. next Friday, that is May 20th, 2016, at the same link. So do log in. Stay tuned. Thank you.